Hello, you're welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 20 years in the Nigerian stock market. In the course of this video, I would like to discuss the fundamental analysis of Mutual Benefits Assurance Plc. Normally, you carry out fundamental analysis to determine the suitability of a given stock for investment or not. How suitable is the stock to become part of your portfolio? It's necessary you analyze the stocks as I want to demonstrate in the course of this video. Let's look at the constituents, the components of the table here. We discover that this is a typical financial statement. So I'm trying to summarize the whole balance sheet, the income statement, as well as the cash flow statement into a single table to make the process of analysis somewhat easy for you to understand. So we want to start with the income statement section of the financial statements, and we are starting with the company's revenue. So the revenue here, the company generated sales of 84.411 billion naira in last year, 2025. This was the sale. Then as at 2024, the sale was 66.916 billion. 66.916 billion was the sales or the turnover for last year, for the year 2024. For 2025, it's indicated here as 84.411 billion naira. You could discover that there is a tangible increase from approximately 67 billion to 84 billion naira. So that's giving us the go-ahead, that's giving us an indication that the company is a suitable candidate. So we now walk down to the other section of the income statements. So we now move down to the gross profit. The gross profit here is 14.256 billion for last year, 14.256 billion for last year, and then this is about 1.071 billion as at the year 2024. You could see that there's a tremendous growth from 1 billion to 14 billion in gross profit as indicated on the table here. We move down to the operating profit. In the operating profit column here, we have the figure 25.696 billion naira for the year 2025 as against 15.744 billion in the year 2024. You could still observe an increment of approximately 16 to 26 billion, from 16 to 26 billion, a difference of about 10 billion naira. So let's consider the profit before tax, that profit before taxation. The figure here is 21.539 billion as against 12.042 billion. There's also an increment in the profit before tax. Look at it here. You could observe the increment from 12 billion to approximately 22 billion naira. The company is essentially doing very well. We now go to the profit after tax. Then for this particular parameter, we discover that the company made 20.876 billion as at last year, 2025. And that is against 11.318 billion in the year 2024. Look at the increment here, from 11 to approximately 21 billion. That's a sizable increment as well. So we consider the total comprehensive income. The total comprehensive income here, we discover that in the year 2024, it was 24.785 billion naira compared to 14.797 billion naira. There's a drop in this particular segment of the company's operation, but all the same, it doesn't really affect the overall profit and loss position considerably. We now come to the most important segment of this analysis. These are the two small figures you are seeing. So these figures are more important than every other figure you are seeing in this table here, and it is called the earnings per share. These are the figures that determine the share price increase or decrease in the future, and these are the figures that equally determine the level of dividends the company will pay out as at when due. You discover that the earning per share grew from 54 kobo to 1 naira, from 54 kobo to 1 naira. There's almost 100% increment in earning per shares. As earning per share simply means the company's profits, all right, the company's profits divide by the number of shares outstanding. Let me come to this side of the board. The earning per share simply means the company's profits, all right, divide by the number of shares outstanding. And what is number of shares outstanding here is 20.1 billion. That's the company's shares outstanding. When you divide the profit by 20.1, you will arrive at what? You will arrive at 1. And what is the profit here? That's profit after tax, which is 20.876 billion, divided by the number of shares outstanding here. Okay, that will give you the earnings per share. All right, for this particular year, 2024, when you divide this particular one, 12 by this figure, it will give you 54 kobo. So as told us earlier, these are the most important figures in fundamental analysis of a company. This is what determines everything. These small numbers you are seeing so is what determines the overall movement of the stock price. We now go to the market capitalization. This essentially is the multiplication of the price of the company by the shares outstanding will give you the market capitalization. So in essence, what is the essence or the importance of market cap? It simply means that if you can afford maybe 83.9 billion naira, you can buy the whole company. All right, that's the essence of market cap. With this particular amount of money, you can buy the whole company, and it tells you whether the company is a micro cap or mid cap or large cap or mega cap, company. So this is what determines the size, the overall size of the company. So we now come to what is called the PE ratio. The PE ratio here indicates the level of cheapness or the how expensive the company is. Is the company cheap? The company expensive relative to other companies in the same sector and in the overall market? This is the figure that determines how cheap or expensive the company is. So in this case, the PE ratio simply means divide the price, all right, the company price here, divided by the earnings. In other words, you are dividing 4 naira 18 kobo by 1. That will give you what? That will give you 4.18. This is the PE ratio. So the company is relatively cheap. We now come to the equity per shares. That's you divide the equity. This is the equity. The equity simply means the company total asset minus is total liabilities. The company's total assets minus total liabilities gives the equity. In this case, the equity here is what is 69.18 billion naira. So the company's balance sheet is very, very strong. This particular figure gives you the strength, an idea of the strength of the company's balance sheet. So in this case, the equity here is approximately 70 billion naira. So it's the company's balance sheet could be considered a fortress balance sheet, a very, very strong balance sheet. So we now go to the equity per share. This particular value is very, very important. So in this case, we divide the equity, all right, by the number of shares outstanding. That will give you what? 3.54. So now compare this particular figure with the stock price here. All right. And so the stock price is 4 naira 18 kobo, and the equity is what? The equity per share is what? Is 3.45. So in this case, the difference is not much. All right, which shows that the company isn't that expensive. All right, though this is bigger than this, but it isn't all that expensive. Assuming this one is bigger than this one, we will say, well, the company is very, very cheap. But all the same, all right, this is what we consider the most, the earning per shares. All right, and so we now come to the cash flow statements. All right, it's a very, very important component of financial analysis. I told us earlier, you consider the balance sheet, the income statement, and this is a summary of the cash flow statement. In other words, you ask yourself, what is the cash position of the company? The company has 39.376 billion naira in cash. That's cash at hand, cash in the bank, you know, and then cash maybe, in fixed deposit, as the case may be. This is the company's cash position, 39.379 billion. Now look at it very well. This cash position is even more than the company's profits. That means that the company is doing very, very well. It has excellent cash management. Some company may produce, positive profit figures, but you can't see those figures reflected in the cash balance. But here, look at the cash balance. It's quite tremendous, even compared to the company's profit. That means the company can, is in a better position to meet contingency expenditure, as the case may be. This is a very strong company. And considering the overall analysis we've done so far, Mutual Benefits Assurance, has a buy rating. Although the entire exercise here is for educational purpose, but all the same, we are arriving at a buy rating. Now, you are expected to subscribe to this channel. All right, like this video and share it as well, because my heart desire is to reach out to 1 million Nigerians with this message of investing in the Nigerian stock market. As before I round up, whenever you see this figure, earning per share, almost doubling in the case as is indicated here, it means that in the next 9 to 12 months, this company, if it doesn't double, it would at least increase by 50%. The share price will at least increase by 50% if this performance continue into the future. If we put in 1 million naira here, in the next 9 to 12 months, you should expect at least 500,000 naira in returns. That's the essence of this particular analysis. So thank you very much for watching. Please stay tuned for other presentation, other videos in this channel.